Good morning, everyone, and welcome to the European Crossover webinar. And we've seen the equities continue to move lower. We actually went limit down not too long after the S&Ps had opened, or equity futures had opened. I guess they thought there was going to be passing of the bill on the Senate side, and a little bit of posturing and politics going there. So we've continued to press lower here, and trying to update some economic data here. Bear with me. And we've seen euro continue to go and move lower here. With the cash dollar index making a run back above this key 230, we actually from here went right back up to the highs, and we're just above this key weekly level here. We're going and pop into the euro and look at some of the other pairs quickly. Come back here and made another low, just a bit lower here. You can see that, just a hair. And on Friday, you can see here that we'd had a bit of a almost like a long-legged doji here, and we're kind of in the middle of the range, actually starting out today. We've had quite the run already here in the pairs across the board. If you're looking at the majors, and if you look here, dollar peso has made another new high. Actually, this is a record high, so a record low here in the peso, and dollar yen continues to push up further here. Potentially, this market could still go much higher if you think about it, for a lot of reasons, including the BOJ continues to go on and take steps themselves, and really the potential, as I mentioned here, on the dollar yen to move even higher.
The S&B there, so the current account surplus in 2019 was 86 billion Swiss franc. That's 29 billion more than the previous year.
And take a look at cable. Cable just a little bit under pressure. Certainly we saw that huge rebound back here on Friday. Market has pulled back and actually we're trading in the lower 16s now. So let's go on and take a look here in equities. And as you can see, new lows here in the NASDAQ. Obviously, S&Ps also, but let's clean this up a bit. We have seen the market come off the lows. I had noted here on Twitter during the Asian session. Also, I posted in the chat room, that the NAS was continuing to lead, and it looked like we were open to popping a little bit, is what my word was. And certainly we did go in and eventually going to move off of these lows here as NAS picked itself up and S&Ps went and followed. Out here, but we have gone pulled back just a bit, but we're certainly off of limit move. A limit move was at the 2174. We actually made it all the way up to the 2230 before pairing back. And taking a look here on NASDAQ. There we go. So we did, we had also gone limit down here at the NASDAQ, and then you can see here little by little we began to go and push higher here. Hence my point about posting that it looked like we had the NASDAQ beginning to move higher. What I said was popping, and then we kind of dipped back. We kind of had just some back and forth, but we kept making a push higher, dip back, and still push higher and higher until we finally made it up here to 68.35, currently 67.46. But it certainly has dragged up the SPOOs. It's a bit, like I said, my thoughts were, look, they're going to get the package done. A little bit of political posturing, but they will get the package done. And with that, that opens the door for us to move higher. But of course, like I said, we're still trading a little bit thin. And certainly the concern is, the market is spooked. So somewhat more difficult to move higher, but higher we have moved in spurts. Paired back a bit, but I think we have the potential probably to go in and put in a short-term bottom, if nothing else. My thoughts were the package is bigger than what was expected last week, and I think as things continue to become more worrisome, I think that will go on and get done. Yeah, Pedro was asking to have a kind of take a quick look at gold, and actually, I was just moving to the gold market, so I'm kind of poking along here. Thanks, Pedro. One moment. Yeah, we were just going to gold. So here we are on the gold market, and I saw you mention it in the chat. One moment. Saying hello to a couple of guys that just popped into the room. Yeah, so here we are here in the gold market, and we're still, under a little bit of pressure here. I haven't been a favorite of gold. Obviously, gold is sold off for um, liquidity, if you want to call it. Really not liquidity, but for margin pressures among other assets. Obviously, equities where people have had to sell it to meet, margin calls and these other equities. But my point is that, initially, remember 3 weeks ago when we were shedding, I was saying, hey, look, people just want cash, CASH, cash. I mean, real cash. I mean, not even, bonds or paper. They want cash. And we saw that. But after the initial wave of selling and maybe the secondary wave of selling, my thoughts were, hey, gold should be flying off the shelves at this point, and we certainly haven't. Now, when I compared to what happened in 2008, when I remember when gold had, I believe it was like, I don't remember what day it was, but I mean, it was at the beginning, and gold opened up, like people thought gold was going to take off like gangbusters. And I think it opened up like $75 higher, if I remember correctly. And then from there, it just went down, just kept sliding back. And I was having a conversation with Stelios, and I think he said that at the time, gold bottomed eventually. I think he said it 600 and something, and then eventually we did move higher. So when I tried to equate that, or trying to get the right word, extrapolate that to what we were trading now, then my thought was, well, if you compare the pullback and from a percentage standpoint, my thoughts were that gold could potentially come down here to 1350. we're holding up very well. When you look at it, it hasn't, I mean, it has stopped falling overall. I mean, you can see here. I don't really see a reason why it's going to come apart, because if you look at equities continue to move lower, and yet gold isn't moving any lower. Now it's not certainly not moving any higher, and we're not getting any spook runs. Equities take a dip, and you spook the gold spooks up to 1550 or 1570. I mean, we just keep languishing here sub 1500. Doesn't mean we eventually can't move, but and probably will in turn move, because once again, at least it's not falling. Even with equities falling, it's not continuing to slide. But that being said, I think people are so spooked that right now people are. I've seen multiple stories now. People just want to be in straight up cash. So I think people don't even want to be in, even to a certain extent, unless you're a longer term investor, don't even care to even be in gold right now. They just want their money in as liquid can be. And I think that that's what we're seeing here at the moment. But to its credit, it's not falling. Even though if you're thinking, well, I thought there were liquidity pressures, liquidity as far as margin pressures, selling because of issues that people have in equities. But even with equities moving lower, and they have continued to go on and move lower, gold has in itself stopped falling. So I think we're at a point where, if we look at this daily chart, and then look here in the daily here in equities. You see there, look at that. See, so we've continued to fall here in equities, and yet gold's holding up better. So I think we're kind of in a good area here. I still believe, my thoughts were that it would still break lower, and but you got to give it its due that it is holding here. I think if we can stabilize in equities, and I think we are starting to stabilize, in the sense that I know they get the package is going to get done. So that's my thinking, is that I was saying in Asia, hey, look, it's going to get done. A little bit of posturing. I think that provides a mention was like a base case. I think that from here we can probably start to see the equities move higher from here at the start of this week. At least I believe that. But once again, gold's holding up relatively well overall. Once I think we can get past the market can feel like it's got a little bit of firm footing underneath it, then we probably will see gold pop up. Maybe, like I said, if we were to start to see that at the beginning of this week, then gold would maybe pop up like on Wednesday or Thursday out of nowhere and jump up like $50, and then you start to see some people start, as the market settles down, starting to move some assets into gold. But I think right now we're just a little bit on shaky ground, and it remained to be in shaky ground in the equities. And with that, we're just not seeing that bind here. You want to see the market stabilize. The first thing that gold's doing is, which is a good sign, it's not, equities are falling, but gold's not falling anymore. I mean, even when it slides back, it's finding some buyers here. You can see, even though equities have moved to lows, you can look here on this daily, we haven't even challenged the low right now, the most recent low. So it's a good sign here. I would wait for equities to stabilize. But if we do keep holding here, then I think once they do stabilize, and once again, get a little bit of stable footing in equities, then I think you'll start to see gold. One day you'll see gold pop up like $40. People are like, wow, what happened here? Where's the news? And next thing you know, you'll start to see gold start to advance from there. But I will give it props, because I would have thought that we would have continued to fall back, and my line was for 1350. But as long as we hold in this area, and that's what you want to look for. Let me pull that back out again. You see that? You can even see the comparison there. Look, equities continue to see, we've even broken lower. You can see this kind of is similar. Let's point this out right here. You see that right here? Very similar pattern. Look at this. Here, here, here. But look at equities. They continue to challenge lows, okay? Here, you can see right here, see how we broke to new lows, and then Friday, and then we broke even lower. Look here. we're not even getting to these lows here. So we are diverging in a sense, a positive divergence. So if we do kind of find our footing here, I think if we kind of stabilize, they pass the package and you see let's rebound a little bit, you're going to probably see gold really kind of take a quick spurt. And then people start to feel comfortable and think, you know what, as things start to settle, why don't I move a little bit of stuff in gold? And you'll probably see that. But anyway, thought I'd get into that a little bit. Let me go on and let's just go and move into the news. It's just one short story. We'll move right into the analysis. Looking here for news, we do have National Activity Index, and that's going to be it. Tomorrow we do have flash PMI, and that's out of France. German flash PMI, and Eurozone, as well as UK, once again, flash PMI. Even here in the States. That'll be tomorrow. Okay, dollar up, but doubts about U.S. stimulus vote narrow gains. The dollar held gains against most peers on Monday as fresh declines in stocks accelerated the flight to cash. Although it lost ground against the euro and yen as U.S. lawmakers failed to pass a stimulus package to fight the coronavirus. Legislators in Washington were unable to clear the stimulus measures on Sunday, and a vote on Monday was ruled out as the Republicans and Democrats tussled over the details of a proposed $1 trillion spending package. Some investors who had bet on a big stimulus ventured in frustrations by selling the dollar against the yen and the euro, but analysts warn this move is likely short-lived as the majority of investors unwind positions to hold cash. Yeah, we've been talking about that. We've moved from risk off to a phase where major players are competing with each other over the safety of holding dollars in cash, says Yukio Ishizuki of Daiwa. There were still a lot of investors who need to sell their riskier assets and they want to hold their money in dollars against the yen. The currency-based bounce between gains and losses, but last traded down 0.6 at 10.07. The dollar initially rose against the euro, and the strongest since April of 2007, but then paired gains to trade at 107.42. Right now we're at 106.95. So the ECB stunned investors last week by launching the $750 billion euro emergency bond purchasing scheme. The greenback erased those gains and fell to 6.94, pulling back from the strongest since at least 1985 when they looked at the pound. U.S. political uncertainty added to the tense mood in Asia. Partisan battles in the Senate stopped a $1 trillion plus coronavirus response bill from advancing on Sunday, but talks continued over Democrats' demands for more funding for medical care and state and local efforts to combat the pandemic. The bill is Congress' third effort to blunt the economic toll of a disease that has killed at least 420 people in the United States and sickened more than 33,000. Nearly 1 in 3 Americans were ordered to stay home on Sunday to slow the spread of the disease, while Italy banned internal travel as deaths reached 5,476. Trump has approved disaster deceleration requests from New York and Washington, while St. Louis Federal President James Bullard warned unemployment could reach 30% unless more was done fiscally. Elsewhere, the dollar extended gains. It's close on the multi-year highs against the Aussie and the New Zealand dollars as the economic cost of self-isolation triggered the largest intraday decline in New Zealand shares. Investors have been liquidating positions in safe havens and other riskier investors to keep their money in dollars. Due to the uncertainty caused by the epidemic, major central banks have ramped up efforts to ease a global funding crunch, but the U.S. currency remains in demand due to the high degree of uncertainty and unknown flu-like virus. Investors have to pay 86 basis points over the interbank rates to swaps 3-month yen to dollars. Cross-currency basis swaps rates showed on Monday. This is less than 139 basis points premium reached on March 19, but swap rates are still above average. The dollar has also surged against many emerging market currencies, highlighting the growing sense of risk aversion across the globe. In Asian trading, the dollar rose to a record high against the Mexican peso and the highest since December 2018 against the Thai baht. So far this year, the dollar is up 26% against Brazil's real, up against the 11% against the Korean won, and 20% against the Indonesian rupiah. Global markets have upended in recent weeks as the coronavirus spread from the central China, and governments have responded with increasingly strict restrictions on travel. Well, that's the only news story we're going to go and cover for today. But I mean, obviously, no surprise what we're seeing here. When I say that, we're just getting a quick drink of water. One of the things that we were talking about, and Pedro had asked about the gold, and we spent a little bit of extra time in looking at the gold market. One of the things that will be a key focus to give you an idea when things have slowed down, keep a good look on this peso. Once we start to see this, I think futures, and that's equity futures here in the U.S. I think they'll start to stabilize this week, at least a bit, but you can still see, and I think that when that does happen, it may not be 2 or 3 days later, but I'm talking about as far as gold, several days later, we'll probably see maybe gold start to respond by moving higher and not necessarily paring back as it has. But one of the things when you can, at least I believe, that you can kind of keep an eye on, if you're thinking, are we starting to see a little bit of a turn here in the dollar? Will be when you start to see this peso pull back. And we have not seen it pull back. And if you look at this, you're probably thinking, well, yeah, that's kind of obvious. But I'm saying is in our analysis, which probably, wasn't a whole lot to think, but my point was, I think we're going to get to 25. I think you're going to want to trigger 25. And I think I did like a fib extension. I think I came up with something like 25.32 or something like 161% extension. But I mean, it's not going wildly over, but it has not slowed down. But it's still continuing to advance. Once we can probably, hit these stops here, and maybe we start to see this pair back, then I think those are some signs that you can look for the dollar start to finally pair back a little bit. We've seen it against, the yen, but the thing is, the BOJ is looking to continue to do more action. They bought, we've been seeing all these central banks take so much action, but we did see them buy even more ETFs on Friday. So they're really throwing everything, the kitchen sink, the kitchen. Actually, they're even throwing the living room at it. So, and obviously they were talking about the euro holding up a little bit better. Well, we already went to new lows earlier again today, and kind of came off of that, but we're still just trading here at 107. But once we can see that, then I think you'll start to see the market finally start to kind of even itself out. But that's not going to happen anytime soon. But I think you'll see equity stabilize a little bit here in the U.S. this week. So with that, let's go into the analysis. So the euro finished a volatile week amid the massive dollar funding issue. Steps have been taken by central banks to address, but the eurozone has its own unique issues that are keeping the pressure on the currency. Support levels here are going to be 583, followed by 514. Resistance is going to be 787, followed by 838. So we said 787 here, and you can see we've come up. This is a key level, the 776. We came up short of that, so let's stick with our 787 here. One of the things we're starting to see right now is we did make just a hair a little bit lower, maybe by like a couple of pips or something like that. You can see here. We are starting to trade a little bit tighter range, so at least we didn't come off too hard. You know, here it could have been even worse here in the euro. So when we're looking at one of the things we're looking at came down here to 634. I remember the key level. This was about 3 years ago, maybe 4 years ago, when we came down to 514. Well, actually, we broke above 514. This is when the euro gone as low as, I think it was 380. And then once we got above 519, we saw the euro rip. I remember, I think it was the central, we had an ECB meeting, and just before the ECB meeting, I think that's when it started to make that move. And once we got past 519, we saw the market accelerate to like, I don't know, I think it's like in the low sixes or something like that, if memory serves me. But anyway, that being said, so if we were to break much lower, the first area I had was for 580, but we seem to be holding here. So what we can do is on a very short-term basis, let's just do a quick fib, see if we can find something maybe around 580-ish. What the heck? Hang on. Looks like somebody removed my template. Well, thank you very much. Well, I do see 127% extension here at 585, but someone removed my template. So mark 585. Let's go move on to the cable. So cable survived a week after complete drubbing that took the pair sub 115, multi-decade lows, after trading 130 2 weeks prior. The UK has incurred further risk beyond the coronavirus with its break from the European Union. Support is 1488, followed by 1410. Resistance is 1742, followed by 1884. And boy, we're trading in a relatively tight range now. Look at this. After that big swing on Friday, after we got quite a bit of short covering. Um, so we have our resistance of 1742. And support's going to be 1488. And moving on to the Aussie. So the Aussie moved down to 55 even in the past week, a move thought to be attained over a couple of months. Obviously, you can see how quickly that developed. Thursday's bar was a long-legged doji, suggesting the move is due for a pause. Friday saw the market rallying to near 60 cents before closing around 58. Support will be 57.30. Looks like we just got below that and tagged 57. Support will be 57.30, followed by 56.62. Resistance is 58, followed by 59.69. Two consecutive 2-hour closes above 59.44 will confirm a bottom. So we've got resistance at 58.80 and support's going to be, we did get down to 57, so the secondary support's 56.62. So 56.62 and 58. And let's go move into the Kiwi. So the Kiwi finished a tumultuous week above the lows, having gone sub 55. Friday saw a squaring up of positions early in the session with the pair nearing 59 cents. The pair closed at 57 even, or right there, you can see there from Friday. Support is going to be 56.12, followed by 54.94. The pair requires two consecutive closes above 58.40 to generate a short-term bottom. So we did go on and make a stab down there. We put 56.12. It just dipped below 56 even, but we'll keep that 56.12. And bear with me. You can see the high there at 57.12 right here. Right there, 57.48.
UK Treasury provide a quick and cost-effective way to raise working capital for those large firms who need it.
Moving on to the dollar CAD. So the dollar CAD culminated a mercurial run nearing 47 cents with Thursday's medium-legged doji, suggesting the pair was susceptible to a pause as noted in analysis. We mentioned that from Thursday, and obviously we saw that on Friday. We saw this from Thursday's analysis. Remember, we had that really across all the pairs, and we had noted that in the analysis. But some of the pairs, like we saw the long-legged doji, Aussie, Kiwi, and saw big rebounds. The move on Thursday wasn't as huge in the dollar CAD, but it was still a medium-legged doji, suggested a pause, and boy, did we get a pause. So that being said, Friday's action paired back over 400 pips from the high before closing at 43.36. Resistance is going to be 44.32, followed by 45.28. You can already see we've already almost made a run up here. We've made it up to 44.89. So 40, we'll go with the secondary, which is going to be the 45.28. If you're taking shorts or you're clocking in shorts, at least you know where your risk level is going to be. We did have 45.18 on the close, but we had 28 on a 2-hour chart. And we had support here at 42.75. Quite the difference here. But we're still within this tight range, so 42.75 is going to be where it is. We're still open to that pullback. We did get the pullback on Friday, but I think we could still probably have to come back here and test. You can see here this high, which was 42.77. That would be Monday's high. Let's move into the peso.
During the BOE, further measures will be announced to ensure larger and medium-sized businesses will be able to access the credit they need.
So dollar peso continued its Phoenix flight, closing at near 24.50. Immediate resistance is 25.38, which is 161% extension of 23.48, 24.65, and support is going to be 23.60. So when you go to these new highs, you're like, well, what can we go to? Where's the target? It's going to be 25.38. And we're actually going to put the support right here, 24. May have to move that a bit. Well, no, 24 is going to be good. 24. So with the dollar yen reversed the losses of the prior 2 weeks, finishing Friday's 200 pip range, just closing above the middle of that same range. The BOJ's potential for ongoing action is adding likelihood for further increases. Key resistance is going to be 1187. A close above opens the door for a move to 1390 followed by 116. Support is going to be 1040 followed by 982. So 982 is the secondary support. And onto the cash dollar index. The dollar index closed below the key weekly level of 230, suggesting the index has the potential for a lower move after moving to 103. The Fed has stepped in mass to support dollar swaps, which should find eventual success. Resistance to start the week will be moves above 230 with support at 134 followed by par 72. So you can see we made that run up in here. Let's go and take a look on the intraday. So it's going to be, let's call it 285. And 170 on the lower end. And looking at the Kiwi yen. The Kiwi yen moved higher, challenging 64 on Friday after Thursday's long-legged doji. And we've talked about that. We've been able to see reverses across the board after some of these long-legged dojis that we saw here. And the thought being, just to go back over that, with a long-legged doji, you have a wide range. Remember on the dollar CAD, it wasn't a long-legged, it was a medium-legged doji. But did we see a pause on Friday? We sure did. So the thought being is that you have this big old range. Bears don't have control because we didn't finish at the lows. Bulls don't have control because we didn't finish at the high. We pretty much finished smack dab in the middle. So generally, you end up reversing, at least from a rested standpoint, of what the current range is. So what has the current range been? Down. So you end up usually going the other way. And we've seen that across the board with it was dollar CAD, Aussie, other pairs following these legged dojis. In this case, long-legged doji yesterday, or actually on Thursday, a dollar CAD's medium-legged doji. But nonetheless, we saw it. Like we saw the dollar CAD come off nearly 400 pips from the high, on Friday following that. But anyway, that being said, after Thursday's long-legged doji here in the Kiwi yen, resistance is going to be 64.17, followed by 65.53, with support at 61.96. So far, the low today has been 61.73. We'll stick with that 61.96. And resistance, we'll just go with this close right there, 63.26. Moving on to the euro yen. The euro yen has been pinned in a range of 1750 to 1925 with a median at 1835. Resistance to test the stops will be at 1925 with support at 1750. The pair will meander until a solid break, possibly generated by BOJ action. So we're just going to go with 1925, 1750. You can see here we've just been stuck in this range, a little bit wider, but it's been tightening a little bit. But notice how we keep continuing to finish in the middle of these ranges. So once again, it's going to be 1925, 1750. I don't see anything that looks good on that euro yen at all. Moving on to the euro odd. The euro odd paired back after an excessive volatile day on Thursday, generating a long-legged doji. See, here we go again, long-legged doji. The body's a little bit wider, but nonetheless, you see here, big wide day. What do you do the following day? Come down. You see the opposite of what's been the prevailing trend. Once again, the euro odd paired back after an excessive volatile day on Thursday, generating a long-legged doji. On a short-term basis, we have a tweezer bottom from Friday's accident. Resistance is going to be 88.06. And support's going to be 82.50. So 88 seems like a wide range, but that's what we've been dealing with. So it's going to be 88.06 followed by 82.50.
Japanese media reports that Japan is to tell the Olympic Committee that they will accept a delay if it is decided.
And onto the Euro Kiwi. The Euro Kiwi experienced a huge range on Thursday of nearly 800 pips. Friday slid back on the close to 87.43. The pair is open to start the week to challenge 90.25. Wow, that's exactly what we just did. We challenged 90.25, okay? With key support at 94.84, immediate support is 86.82. Followed by 86.25. So we did challenge the 90.25. We said we would start to challenge that. So let's go with 90.25 for the resistance. Same thing, long-legged doji. And boy, that was a hella doji. Hella long-legged doji. But you can see here, what did we do on Friday? We reversed or paired back against that. And then, as I said, we started out the week with the potential to challenge 90.25. We did. We're off that for right now. Support then would come in. Let's go and take a look on a short-term chart, well, 2-hour chart. Right there. 87.89. So the Aussie yen finished Friday slightly higher than Thursday's close. The past week is a tug of war between the two weak currencies. Resistance is going to be 65.27, followed by the weekly level of 66.50. Support is going to be 62.35.
Just in Saxo Bank reporting, and I'm getting this from Twitter, that Nordic funds have called in redemptions in Sweden, Denmark, and Norway. There's a number of high yield corporate lending funds have halted redemption.
And we'll go with 64.26 here.
Instruments in their portfolio where they are forced to liquidate holdings.
Now, the guppy formed a tweezer bottom last week at 24 even, culminating with a rally to 32 even on Friday before paring back on the close to 29.60. 29.16. Immediate resistance is going to be 29.86, followed by 30.85. Support will be 28.04. So we're going to be looking at 28.04 and 29.86. Let's go move on to the sterling nod. So sterling nod closes for the last 5 days have been in a cluster between 99.62 and 01.23, despite the ranges extending nearly 800 pips higher and 200 pips lower. Resistance is going to be 2 even with support at 99.10, followed by 97.20. So we have seen, look at this, the closes have been within a cluster. You can see that right here. Right there, you see these closes? Although look at the range has been pretty wide. Resistance, as I mentioned, is going to be 2 even, 0.200. And support at 99.10. And there we go. Here's the bias chart to start the week. We'll just take a quick look. You can see SPOOs moving a little bit higher from VWAP. Although we're seeing a little bit of a decline here in cumulative volume total, which would make it a little bit suspect, but you have to take it all within a total package because we're just up and down. But you can see here that on this run, we are starting to look at the cumulative volume delta declining. But it's lighter volume right now. We've seen this market move and swing a lot, and we've seen this market reacting quite a bit by the NAS. The NAS continues to have its pull over the SPOOs over the last couple of weeks. We'll just take a quick.
Also said to be considering treating those who are flouting the stay-at-home advice as acting against the law, all being discussed, and huge decisions for nothing final.
And you can see here with gold, gold is trying to make a move up here to VWAP here. As I mentioned, I think you got to give gold credit in the sense that at least it's not going any lower. And I don't mean that in a sarcastic sense, but I mean, we've certainly seen equities continue to move lower and gold has stopped falling. So if equities start to stabilize, we can probably start to see gold then move higher. And at some point in the near future, you will probably go on and see folks start to say, you know what, let me put some money in gold. You know, I tell you what, when I look at it, I mean, it's probably a better situation, and it certainly didn't keep falling when equities are falling. At least I got that for it. So that's what I'm saying. You'll probably start to see some people move into that and say, well, that makes sense. And, you know, if equities do go on and rally, gold's probably going to appreciate higher because it was already positively diverging. So once again, like I said, you'll probably, we'll probably get up one of these days and see gold up like $40 or something. People are going to be scratching their head saying, what happened? Well, that's what happened. Although right now we're currently below VWAP. Here's NAS. You can see NAS is also is above VWAP right now, just as the SPOOs are. But here's crude oil. We're above $22. We did get as low as just a hair below $21 when the equities were under pressure Sunday evening in Asia. But anyway, that's it. Thanks for joining us here in the European Crossover webinar, and we shall see you in the chat room.